Hello, and welcome to our market alert video for today, which is September 30, 2022. And thank goodness this quarter is finally over. My goodness, not much good news to hang your hat on this entire period. We're going to get into all of that. And part of the bad news that has been out there, of course, is the hurricane that's going on the shores of Florida. And we want to just say that our hearts, our prayers, and our money are going over to help those people. They need shelter, they need food, they need water. And, I think that any money that we can give can help them tremendously down there. So find a charity that you trust to help them. And I encourage you to do that if you can. Let's talk about what's going on with the market as well. Not much good news there either. And of course, when I say the market, I mean the S&P 500 index and the Dow. The Dow since August 16th is down 15%, 5,000 points over basically a month and a half. And, we've talked about how investors go through different phases during the big bad bear markets that we've seen in the past. And they go through that initial phase, which we call the anxiety phase, which means that, the news isn't so great. Things maybe aren't as good as we think. And there's this anxiety, and there's some selling that happens there. And of course, we saw that in the first half of this year. It's then followed by the denial phase, which is where people start saying things that we heard this year, like, no, we're not in a recession. The definition is not that. And they haven't said we're in a recession. And so stop saying we're in a recession. And that, jobs are plentiful and the profits are great and the Fed's going to have a soft landing and all that kind of stuff. So you got all the denial stuff. And when that happens, you have a big rise. And we saw that happen, of course, in July through the middle of August. Well, then what happens is you start seeing the news come out, which validates that anxiety phase and starts to say, wait a second, things are really not that great. Things are as bad as we thought they might be. And actually, they might even get worse. And that's when you get the fear phase. And of course, we've gotten really bad news from the Fed and from what's going on with many companies laying people off. And we're starting to see the beginnings of that. The real estate market is falling off a cliff. So we're starting to see the effects of all this inflation and the Fed actions. And that's, of course, causing the fear. And I don't know how you define fear and panic, but a 15% drop in the Dow in a month and a half, I think if you go in the dictionary and look that up, you might find that that's what they have in there. I was interviewed by CBS earlier this week, and they were asking me, you said that your clients have been out since April. That's good. But, what about people who are not out now? What about them? What would you advise them? And of course, if you're not my client, I can't really advise you. But here's what I said would be a way for you to kind of frame the question. Okay. So basically, we take over the function of managing money for our clients because we want you to have peace of mind. We want you to not worry about all this stuff. We want to do it for you. And so when we have our investment committee meetings, we always have we always want to avoid what we call the biggest mistake. Okay. So I'm going to ask you to sit on our investment committee, and I'm going to ask you to decide which is the biggest mistake. So mistake number one is that you say, you know what, the market's come down so much, I'm not going to sell now. I'm going to stay in because it's going to rebound. And so that the biggest mistake there is that you stay in and it doesn't rebound, it goes down. Okay. So that's one mistake that could happen. You decide to stay in because you think it's going to go up, but it doesn't. It goes down. And if this bear market turns out to be like Y2K or 2008, it has another 20 or 25% to go. And we don't think that's out of the possibilities of what could happen. So you decide, I'm going to stay in because I think it's going to rebound, and it goes down instead, and you lose another 20 or 25%. So that's one mistake. The other mistake is you decide to sell. I'm going to get out. I want to avoid that downside. And guess what? The market goes up the day after you sell. Of course, I did that. It's my fault. I sold, and that's why the market went up. And it goes up 20%. So that mistake is you sold and it went up. So which is the biggest mistake of those two? Is it that you sold and it went up and you missed out on what you could have gotten? Or is it that you stay in, it goes down dramatically and you lose a lot, and now maybe you can't retire or you can't support the lifestyle that you wanted? I can't decide that for you, but I can tell you for many of the people that we meet with and with our clients, the biggest mistake would be losing a lot of money and not being able to support the lifestyle that I want. So how do you determine that? Well, we have metrics. We have what we call a retirement cash flow plan that looks at how much risk is appropriate for you, how much have you lost already versus how much you need to be retired with. So we have all of those things that we'd like to do with you, no charge or obligation. And of course, if you go to our website, it's rpoa.com. We'll do that with you. And if we can help you, fantastic. And if not, that's fine too. Either way, like I said, no charge, no obligation, and we will part friends. So, but right now, the inflation numbers came in hot and the jobs numbers came in hot. And therefore, we think the Fed's going to raise interest rates some more this month. And if they do, that's not good news for the markets or the economy. They're determined. They said it. And we view that as being not good for the economy or the stock markets and therefore your investments. So come in and visit with us, and hopefully we can help you to have some peace of mind in these crazy times. So thank you for watching this video, and we'll talk soon.